there. I'm Darren Mish. I'm an attorney from Tampa, Florida. I'm here with Len Stauffenger, a tax attorney with a practice based in Akron, Ohio. Hi, Len. How you doing?
Good, Darren. How are you?
I'm doing great. I have some questions for you. You have some time to answer some questions for us?
I'd be happy to.
Fantastic. On your website, that's at fixtaxproblemsnow.com, right?
Correct.
Your website, you refer to solutions for people with IRS problems. Are there any really good solutions for a business or a person that has serious IRS problems?
Yeah, there are. In fact, Darren, we've identified 10 different solutions for just about any tax problem. Now, they won't all work for any one person, but what we do is we analyze an individual situation and then come up with the 2 or 3 or 4 situations that will work for that person or that business.
Wow, that's great. Can you give me any examples?
Well, one of the ones that many people have heard of is something called an offer and compromise. And to give you an example, we recently made a compromise with the IRS for a client who owed $71,000 in taxes. After analyzing their situation and negotiating with the IRS, we struck a deal where the IRS accepted a payment of $1,000 and they wiped out the remainder of the tax. Now, I always tell everybody that doesn't mean it will work for everybody because everybody's situation is unique and we have to analyze it. But that shows that it's real and it's a very effective way of getting rid of taxes.
Wow. Are there any other kind of solutions that might work?
Yeah. There are installment payment plans. Those are good because they will, in certain situations, they will stop the IRS from taking collection activity against somebody, but there are drawbacks to them. And there are different kinds of installment payment plans. One of the drawbacks is that while you're making payments, the IRS is still adding penalties and interest. But there are installment plans that you can effectively impose on the IRS. So again, it's an individual analysis of a person's situation, but that is another method to solve the problem.
You kind of alluded to it just now, but are there any drawbacks to installment agreements?
The biggest drawback is that the penalties and the interest continue to accrue.
Okay.
And again, it depends on the situation. For some people, it's the only option, and for some people, it works very well, but it depends on how much they owe, how much of a payment they can make, and how fast the penalties are being added.
Okay. Well, what should a taxpayer do if they receive a notice that their wages or their bank account are about to be levied on?
Well, they should come and see me or some other professional in a hurry because the IRS, especially if they garnish wages, can really put somebody in a bad situation. And again, there are solutions, but they need to act quickly. They can take a high percentage of your wages, and of course they can wipe out your bank account up to the amount of what you owe. So that's something they need to deal with immediately.
I'm confused about this. What's the difference between a tax lien and a tax levy?
I tell people the easiest way to think of it is this way. A tax lien is similar to your mortgage. In other words, it's the IRS's way of letting the world know that they have an interest in everything that you own. It doesn't mean they're actually taking any activity to try and collect on it. It's just letting the world know that they have an interest in everything that you have. So, for example, in a mortgage, the bank has an interest in your house, and if you were to pay off if you were going to sell your house, they would get paid off. So similarly, with a tax lien, if you tried to sell your house, you can't do it without paying off the lien. The levy is comparable to a mortgage foreclosure. That's when the IRS actually comes after you, takes steps to collect on their lien.
Okay, well, thanks for that. Can a bankruptcy eliminate old tax bills sometimes?
Sometimes. Again, that's sort of a fairly sophisticated analysis, but certain kinds of taxes can be removed by bankruptcy, and for every one of our clients we analyze something that they call the transcripts, or you might sometimes hear it referred to as the master tax file. The IRS has a master tax file on every taxpayer in the country, and we analyze every one of our clients' master tax files. We get that from the IRS, and we have to go over that master tax file to analyze it and determine if bankruptcy would work for them, because there are several factors that have to be looked at in order to determine if the bankruptcy will discharge the taxes.
Is there any kind of statute of limitations or time frame on how, with regard to the IRS and how long they have to collect the tax money from a taxpayer?
Yes, and in this arena, it's called the CSED, Collection Statute Expiration Date. And it's a 10-year statute of limitations, but again, it's not that simple. It's 10 years from the assessment of the tax. Once that statute has expired, then the entire tax is gone, it's uncollectible. That means the tax the penalties, the interest, everything. And again, we figure that out by analyzing the transcripts that we get from the Internal Revenue Service.
Can you give me just one more solution for tax problems?
Yeah, penalty abatement. Some people have heard of that, but the penalties can add up very quickly on tax liabilities. Here's an example. Somebody came to me last week. They owed $102,000 to the IRS. Over the last year, they paid $15,000, but their balance only fell by $2,000 because the IRS had added $13,000 in penalties and interest in just 1 year. There are times when you can get the penalties reduced or eliminated. And again, that's an individual case-by-case situation. In general, it's a reasonableness standard. The IRS looks at your client's behavior and the facts, and if they can show that they acted reasonably and in good faith, and if they have good reasons, sometimes the penalties can be eliminated. And that can be a very effective tool to help a taxpayer get that tax bill down to something that they can manage.
So do you only help individuals with tax problems, or do you help businesses too?
No, we help businesses every day. In fact, there are a lot of businesses out there with payroll tax problems, and those are especially important problems because the IRS takes a very aggressive approach on payroll tax problems. In a nutshell, payroll taxes have sort of two halves, although they're not equal. One half is called the employer portion, and one half is called the employee portion. And the employer portion is the non-trust fund portion. But the employee portion of the payroll tax, which is usually about 60 or 70% of that liability, is considered a trust fund portion, and there are special rules that apply to that.
So I've heard of the trust fund recovery penalty. What does that mean?
Some people call it the 100% penalty, but really, in simple terms, the trust fund recovery penalty is a mechanism whereby the IRS can take this payroll tax liability. Think of it this way: the payroll tax liability is the obligation of the business, not the people who own the business. So if you have a corporation, it's a corporate obligation. The trust fund recovery penalty is almost like a magic wand where the IRS can say, we're going to now take that obligation of the business and make it an obligation also of a responsible party in the business. Typically, it's the owner or people who make the payroll checks. And again, that's a case-by-case situation. But that's the bottom line is they take the corporate obligation, and it remains a corporate obligation, but then they also make it a personal obligation of the responsible parties.
Let's see. Well, can you tell me a little bit more about the kinds of levies that the IRS uses? That's kind of scary.
Generally, there are two. The two that they use most of the time are the bank levy and the wage levy. And they are pretty scary for most people because out of the blue, they can attach funds in your bank account. They cannot take anything over and above what you owe the IRS. But again, they can take everything in your bank account up to the amount of your tax obligation. And that includes the tax, the penalty, and the interest. So whatever that is, they can take that much out of your bank account. And then the second kind is the wage attachment, or what people refer to as a garnishment. And there are formulas about how much they can take, but it's significant. I frequently have people come to me who are having their wages attached, and more than half of their net pay is going to the IRS if we don't stop the attachment.
Wow, that sounds kind of ugly. Are there ways to get those things released?
Yeah, there are. And what I tell folks is, again, act now. The IRS problems are not going to go away on their own. And when you put them off, you're just increasing your risk. Folks come to see me and they're ready to act. That's in their best interest. When they wait, sometimes what happens is the IRS then garnishes their wages or their bank account. There are still solutions for them. It just makes the situation more complicated and more expensive.
Wow, Len, I've really learned a lot today. Thanks for coming online with us and discussing this with us. What's the best way for clients to reach you?
It was fun talking to you, Darren. If somebody wants to reach us, we have a website at www.fixtaxproblemsnow.com, or they can call us directly. And we have two lines. I'm going to read those to you. 1-877-349-8297. Or they can call us at 330-865-9551.
And your office is located in Akron, Ohio?
We have offices in Akron and Columbus, Ohio.
And what areas do you serve?
Most of my clients are from the Midwest. Obviously, we have a lot of clients from Ohio, Michigan, Pennsylvania, but all through the Midwest, including Kentucky, West Virginia, Indiana, and Illinois, and Wisconsin.
Well, thanks a lot, Len. I've learned a lot. I appreciate it. Take care.
Thanks, Darren. Good talking to you.